Problem number 6, page 105. From the following trial balance and other information, statement of profit or loss for the year ending 31st March 2018 as per Schedule 3 of the Companies Act of 2013. We have some information here. We have to go through here. Land and buildings, balance sheet item, we don't consider for income statement. Trade receivables, balance sheet item, it is debtors only. Trade receivable is nothing but debtors, the balance sheet item. Trade payables, again creditors, it is also a balance sheet amount. So first three items won't come. Even the next one, 10% debentures. So it is a loan taken by the company from public. So it is a loan amount. This is also a balance sheet item. Next, it won't come. So first four items will not be taken in the income statement. Sales, 15 lakhs, that will come. Net purchases, underline net. Net means in the earlier problems you have done, cash purchase, add credit purchase, less purchase returns. The answer is net purchases. So same here, they have given the full amount as a net purchases 10 lakhs. That will come in income statement. Wages and salary paid to the employees, income statement is an expense for business. Contribution to provident fund, again amount paid to the employees. This is also an expense for the business. Plant and machinery is an asset, balance sheet item. It won't come in the income statement. Goodwill, again a balance sheet item. It won't come in the income statement. So first four and last two, 6 items won't come. Out of this, 10 items are there actually. So out of 10, 6 won't come, 4 will come in the income statement. And we have some adjustments. Tax rate 30%. Next, depreciation on plant and machinery at 10%, which we need to calculate. Amortization of goodwill by 24,000. Amortization means, I told that in the previous class, that intangible asset, when it is reduced, that amount is called amortization. Similar to depreciation, but depreciation on tangible assets, amortization on intangible assets. So these are the two adjustments which we are supposed to consider. With this information, we'll move on to the income statement preparation. So question number 6, page number 105, statement of profit or loss for the year ending. It is 2018. Next, we have information connected to income statement. So I have the pro forma ready here. I told you to keep all the expenses information and not to avoid it. It will be good for the examination. So you have to remember all the 7 headings under expenses. So we'll go one by one now and start making an entry. So first 4 items, land and building, trade receivable, trade payable, debentures are not going to come. Next is sales, credit item, 15 lakhs. Remember, credit what goes out. So it is a credit item, 15 lakhs. Sales straight away in the income statement. Next, net purchases, 10 lakhs, straight away in the income statement. Purchase of goods, 10 lakhs. Next, wages and salary belongs to employees. Contribution to provident fund, to employees. So there are two amounts connected to employees. So we have to go for one note. So I'll go for note number 1. First one, wages and salaries to employees, 50,000. Next, contribution to provident fund. That amount belongs to employees for their future safety, 10,000. Next, plant and machinery won't come, goodwill won't come, tax will take it later. Next is depreciation on plant and machinery at 10%. Plant and machinery value we have here 2 lakh rupees. On that amount we need to calculate 10% over here. So that will be the another note number 2. Depreciation on plant and machinery. Plant and machinery is 2 lakhs into 10%. That comes to 20,000 rupees depreciation on plant and machinery. We have one more adjustment connected to this here, amortization of goodwill by 24,000. It is given here 24,000. So amortization also comes under depreciation amortization, note number 2. Amortization of goodwill, 24,000 rupees. We will come to the taxes later. But in this, we have a hidden adjustment, or we call it as implied adjustment, or we call it as we have to understand the adjustment. It is known. So I told here 10% debentures mean it is a loan taken by the company from public. So what is the loan amount here? As you can see here, 3 lakh rupees is the loan, 10% is the interest. But company has paid or not, if you look into trial balance, we don't find the interest paid, or we don't find in the adjustments interest to be paid. Both are not there. If the company has paid already, it will be seen in the trial balance. If the company has to pay, it has to be in the adjustments. But nothing is there. Imagine the company has to pay interest on a loan to a bank. They will not keep quiet. They will ask for it. So as per the reality, any interest payable to anyone, whether it is bank, public, or any other person, that interest has to be paid by the company. If not on the end of the year, on any other day. So we understand here it is not paid. So you can see here the date 1/4/2017. The loan has been borrowed. This date indicates on which day the company has received a debentures amount from public. So from this day, interest has to be paid up to 31st March 2018. You can see here. So till here, we can see 1 year difference, 12 months difference. For 12 months, interest is not paid, that to be paid. So this is a very important adjustment, whether interest to be paid or interest to be received. They need not mention in the problem. That is quite understood. We have to work it out. So if it is so, that becomes interest payable. So I have written here on fixed, on the financial cost, outstanding interest on debenture. Debenture amount is 3 lakhs, 10%, 30,000. Outstanding means Interest not paid. Remember, interest not paid is outstanding interest on debenture. Only one finance cost, that is interest, paid and payable. Paid and payable, both will come under finance cost. Remember, I have calculated on debenture value. Debenture value is 3 lakhs. 10% on that is 30,000. This is called implied adjustment. Remember, implied adjustment. So we are nothing left with. So we have completed all. So I'm going for the total of the 2 notes which we have prepared earlier to this. So I will take this 60,000 to employees benefit expenses. I'll take this 44,000 to second note, depreciation and amortization expenses. So depreciation 44,000 and employee benefit expenses 60,000. So I have taken both. Now, after all the adjustments are considered, which are expressed and which are implied, so I left with only tax rate, that I will take it when I go for totaling the income statement. So here 15 lakhs is the sales, other incomes are 0. So if you add both, is the 15 lakhs itself is the total revenue or total income. Then we have to add these 4 expenses. Out of 7, we have got 4 expenses. So the total of the expenses will be 11,30,000. So 15 lakhs minus total expenses. 15 lakhs is the total income. Total expense is 11,30,000. Profit before taxes will be 3,66,000. So this 3,66,000 to be taken for the calculation of tax 30%. So 3,66,000 into 30%. $1,09,800. So if you deduct that tax, then you are going to find profit after taxes. $2,56,200. 2,56,200 is the total profit after taxes for the year.